Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about volume profile, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
I've been giving some thought to the idea of going back to using volume profile as maybe an aid to entering a trade. And so I'm going to explore it a little bit more in depth. I originally started out that way for a while and I made a practice of it. And I found that for the most part, it didn't seem to make a difference. And it could be maybe my analytical methods weren't sophisticated enough, but I'm going to put a lot more effort into it. After a while, I got a little frustrated that I didn't seem to make a big difference between that and then arbitrarily putting on trades at a certain time or within a certain time frame. I think the reason why it made a big difference back when I was using profile was that generally I put the trades on during that power hour between 9:30 and 10:30. There seemed to be a lot more clear-cut definition on market movement and as it approached various liquidity zones, and the way it was acting seemed to make a lot more sense. Over the past year or so, it hasn't been that way for me, and I didn't derive any real benefit from it. Now, that doesn't necessarily mean that putting it on at an arbitrary time is definitely better. I don't know if I can make that claim, but I believe that when volatility was higher, that was part of the reason why I did better. But it's so hard for me to make these correlations because I never saved the data to correlate or to figure out whether or not the decisions that I made had made a material difference. There were times where I did a lot better and other times that I didn't do as well, but usually I always correlated doing better with higher volatility. So I guess what I'm saying is that I don't really know. I don't know if spending that extra effort to analyze market structure on entry is a good thing to do or not. It seems to make sense if you can predict where price might land, but that's the problem, that it's so hard to do that. And either you're right or you're not. And I think that by doing the analysis that you're basically saying that I can raise my percentage of predictability, which I haven't really found to be the case. Maybe I'm not trying hard enough. I don't know how any of you feel about that, if you have any input to that, if you think that it's a worthwhile endeavor to do a more complex study on the interaction with profiles as the market traverses them, and at least try to discern a direction based on liquidity zones and whether or not we're sweeping or grabbing liquidity or breaking, whatever. Because this morning's drop down to this area of low liquidity and then stopping right on that LVL at 54.91 seems to have some relevance to it. Could that have been predicted?
Seemed just as likely as anything else, though. That's the whole problem, is that we have no idea what direction it's going to go. You can path it a variety of different ways, and any of them are valid, or none of them.
And once you make your decision's made. It's not like you can go and adjust it.
Whether you've bought or sold, at that point, it's done. But it seems to me like the market wants so badly to go up that it doesn't matter ultimately what the news is that comes in, whether it's good or bad, or whether the Fed's going to cut the rates or not. The market wants to go up. Now, there might be some pullbacks based on that new information, but it's a temporary thing. The market is ultimately still going to go up.
Dave, I think the reason is very well known, and it's what I've said all along, that there's just massive amounts of liquidity in the global market that is still being worked off.